A personal loan is a one-time lump sum of money you borrow from a bank or online loan lender. You can use the loan to help manage unexpected medical expenses, home repairs, or repay credit card debt. And like every other type of loan, getting pre-qualified will help you when it comes time to apply for the loan. Getting pre-qualified for a personal loan is a preliminary step in your loan approval process. Not only does it give lenders an insight into your creditworthiness, but it also gives you a snapshot of the loan you might receive when you're finally approved. However, getting pre-qualified for a personal loan doesn't guarantee you a loan or the terms stated in the loan estimate. While getting pre-qualified by a lender isn't necessarily required, it gives you a ballpark estimate of the loan amount you'll be receiving if approved. We'd like to provide you with a step-by-step strategy to help you pre-qualify for a personal loan. The process of getting pre-qualified for a personal loan will vary by lenders, but it often boils down to the steps we will cover. Number 1. Check your credit score. Since personal loans are often unsecured, meaning they don't require collateral, it is common for lenders to rely on your financial history when deciding on your eligibility. When getting pre-qualified for a personal loan, your credit score and history play a considerable role. Your credit score reveals your financial history, creditworthiness, and credit utilization to lenders. It can be hard to pre-qualify for a personal loan or get an affordable loan if you have a poor credit score and history. Number 2. Make sure you can afford a personal loan. While you may be taking out a personal loan to cover a critical need, you need to ask yourself if you can afford one now. Personal loans require specific upfront fees and monthly loan payments. These fees and payments can run into hundreds of dollars monthly, which may negatively impact your financial budget. Before taking out a personal loan, you should consider the steadiness of your employment and income. More importantly, it would be best to consider whether you can fit in another loan payment with any existing debt payments. Number 3. Find a lender that offers pre-qualification. Not every lender offers a personal loan. So, if you want to get pre-qualified for a personal loan, you need to search for a lender that offers personal loans and pre-qualifies borrowers. When searching for a lender that offers a personal loan, a good strategy is to seek recommendations from family and friends or look at reviews online. You should also consider applying for a personal loan with multiple lenders. Number 4. Compare lenders. We always encourage shopping around for lenders. Compare loan offers and estimates when looking to get any loan. And personal loans are no different. You should not settle for the first lender you approach, no matter how affordable the loan terms may seem. We recommend using a platform called Credible. Credible allows consumers to easily compare rates, fees, and terms from multiple lenders. The process is simple, easy, and the most efficient way to find the best terms and rates for a personal loan. When comparing lenders, you should consider the following factors: loan terms, loan amount, interest rates, penalties and fees, and collateral. Number 5. Pre-qualify with the lender you choose. Thanks to technology and the internet, pre-qualifying for a personal loan is quite easy. These days, you can fill out the personal loan pre-qualification form online. Simply fill out the form, provide the necessary information, and wait. Usually, you will have an answer within minutes, but it may take longer depending on the lender you selected. If the lender approved your pre-qualification and you're happy with the amount, rate, and repayment term, then it is time to apply for a personal loan formally. There may be a lingering question in your brain right now. What should you do if your loan pre-qualification is denied? Under certain situations, your lender may deny your personal loan pre-qualification. From poor credit score, high debt-to-income ratio, to unstable income, the reasons are numerous. If your personal loan application was denied, the Fair Credit Reporting Act requires your lender to send you an adverse action notice. The adverse action notice will explain why you were denied credit. There are some things you can do if your personal loan pre-qualification is denied. Improve your credit score to increase your chances of getting pre-qualified on your next attempt. Consider other financing options. If your purpose for taking out a personal loan is for home improvements, you may want to look into home equity loans. Ask about a cosigner. If you have a friend or family member with excellent credit and financial standing, you may consider asking them to co-sign your loan. Just remember, when searching for a personal loan, getting pre-qualified is worth the time it takes. It allows you to compare lenders and loan terms to find your best option, which ultimately allows you to save money. And to be honest, who doesn't love saving money? If you like this video, then make sure to hit the like button, subscribe, and join us every week as we break down personal finance topics in plain English.